Hello everyone and welcome to today's morning report analysis videos on Wednesday the 9th of January with me, Richard Perry, market analyst at Hantec Markets. Let's have a quick look at how the board is looking this morning. Looking pretty risk positive actually. We've seen the dollar, which is weakening, but also the yen, which is a big underperformer, and that's coming as these trade talks between US and China continue into a third day. That's an unscheduled third day, which is suggesting that they're saying that progress is actually starting to be made, and they want it to continue, which is a good thing. So subsequently, we've also seen the oil price rally. Now, this is a big move. This oil price rally that we've seen in the last couple of weeks has picked up. That's around 19% from the low on the oil price rally in just over 2 weeks. So that's a really strong move. Obviously, we've seen a huge bear market actually between October and December, but subsequently we've seen that rebound, and the rebound is looking quite impressive actually. It's going through $50 on WTI, and that is helpful certainly. And it sort of helps to drag these treasury yields higher, because obviously higher inflation through a higher oil price suggests that treasury yields will be pulling higher as well, and that's what we're seeing, I think, through these markets. But there is definitely a risk recovery that we've got in play here. We've got the gold price, which is just consolidated the last couple of days, slipping back slightly. Equity markets very strong. Also, we've seen that rebound on Wall Street, which continued last night, continues to show through the continues to show through the futures as well, now 0.4% up on the S&P 500 futures today. So again, helping through Asian markets, which are all strongly higher as well, 0.7 and 1.1 on the Shanghai Composite and Nikkei respectively there, but also we're seeing through European markets as well, another % higher today. So these equity rebounds certainly help through the oil price rebound. Treasuries up, general risk appetite improving again, so it all sort of adds up to a decent recovery that we've seen in the last few days, and the driver mainly being these trade talks between the US and China, and if that yields some sort of decent traction in the trade negotiations, then all the better for risk appetite. So we've got a little bit of US data, nothing major. We've got the Bank of Canada in the afternoon actually being the main sort of focus. It's sort of on, I mean, from what I've seen, consensus is sort of on the fence whether you're going to get 25 basis point rate hike or not, and it'll be interesting to see the volatility that comes on the back of that decision this afternoon. But the EIA inventories are at 330. Expected to see a drawdown of crude stocks and another build of distillates and gasoline, and then later on today we've got the Fed minutes at 7 o'clock. Don't show through here on Reuters, but they are at 7 o'clock. And again, it'll be very interesting to see how the Fed is thinking on the potential for slowing down of its rate hikes into 2019, and also the impact of what was an increasingly volatile set of markets as the December meeting was taking place. So let's see how that affects the Fed minutes tonight, but there'll be a focus on that certainly. So takes me to my chart of the day, which is Euro Yen. Now, what we've seen in Euro Yen is this rebound. Yen generally has had a correction after strong moves last week at the height of the Forex flash crash, but also risk appetite concerns. Those risk appetite concerns have unwound in recent days, and subsequently the yen has unwound. But is it a move that's going to be sold into? Because I think that there is considerable overhead supply on this euro yen now. So I think that leaves this chart at a very key crossroads. Is this going to be an area where the market starts to fall over? So you've got this candlestick yesterday, which was a negative candlestick, which would suggest that the market was sort of a little bit umming and ahhing about the recent recovery. Decent response today by risk appetite, but it's still within this 3-week downtrend, still within the 2460 to 2540 sort of band of overhead supply. that you've got on this chart. So it'll be interesting, as I said, if the market starts to sort of falter in this resistance band. But to be honest, whilst you're trading below 2660, I would say, or even up to 2710, I think you're still in this negative mindset surrounding euro yen, and it's just simply an unwinding move that could again start to falter. So it's in recovery mode still, but how long is this recovery mode going to last for, I think, is the question. You can see that through the hourly chart, where you've got this run of higher lows. But again, is that strong momentum configuration? It's positive without being exceptionally strong, I would say, on the near term chart. So let's see how this one develops today, and I will speak to you later. Thank you.